Imagine a financial war where Wall Street's smartest minds are losing, not to other billionaires, but to millions of retail investors who simply refuse to give up. That's right, AMC isn't just a stock anymore, it's a movement, and the battle is heating up like never before. Hey, welcome to AMC Daily. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads, and also enter our giveaway. But everyone, remember this is not a financial advice video. Today I'm walking you through the full AMC playbook, why the short sellers are on the edge of collapse, how retail is winning by holding, and why AMC's future looks stronger than ever. Let's begin with the basics. AMC's survival was never part of Wall Street's plan. Hedge funds and institutional short sellers bet heavily against this company, assuming it would go bankrupt during the pandemic. That didn't happen. And now, instead of accepting their loss, they've been playing dirty, manipulating the price, flooding the media with misleading narratives, and engaging in financial trickery like toxic swaps and hidden synthetic shares. But what they didn't anticipate was the resilience of the retail investors and the revival of the movie industry itself. The film industry is making a serious comeback. In fact, box office numbers for April were double what they were last year. May is following the same pattern. This means that the second quarter of this year, Q2, is shaping up to be a blockbuster, both literally and financially. And when the industry does well, AMC, the largest theater chain in the US, naturally benefits the most. Now, let's address the elephant in the room, AMC's stock price. Critics say, if AMC is doing so well, why isn't the stock reflecting it? The answer is simple: manipulation. The price doesn't reflect the true value because of massive short positions and price suppression tactics. These shorts are billions in the red and are doing everything possible to stop the bleeding, even if it means rigging the narrative. According to a tweet from a user named Greenholder, AMC is projected to be profitable in Q2. That's huge. We're talking about cash flow turning positive, a major milestone. No more cash burn, no more survival mode. We're entering a phase of growth and profitability. Yet the stock is still deeply undervalued. What are we missing? Well, we're not missing anything. The market is just being rigged against us. Let's talk numbers. AMC has done share offerings in the past, and while those diluted the stock, they also added cash to the books. As of today, there's no indication of any upcoming dilution. In fact, management hasn't even hinted at it. That tells us they're confident, not desperate. If a cash raise were to happen again in the future, it likely wouldn't be for survival, but for strategic growth, just like what GameStop did when they raised capital and pivoted to new ventures. Another powerful point: the float is locked. Retail investors own the vast majority of AMC shares, and there's virtually nothing left to short or dilute. That means the shorts are trapped. Their only escape routes? 1. If retail investors suddenly panic and sell off en masse, which we know isn't happening. Or 2, if AMC goes bankrupt, which is highly unlikely now, given the improving fundamentals. Remember, Adam Aron, the CEO of AMC, has publicly stated there are no signs of bankruptcy for the foreseeable future. And with solid revenue growth, declining debt concerns, and strong box office numbers, that statement holds more weight than ever. So if the short thesis is dead, why are the negative headlines still pouring in? Because the media is part of the manipulation machine. Fake news, clickbait headlines, and AI-generated articles are now being pumped out daily to scare investors into selling. You've probably seen headlines like AMC underperforms competitors, or analysts say AMC is headed to 95 cents. But here's the twist. While these stories try to paint a gloomy picture, institutions are quietly buying up AMC shares. That contradiction speaks volumes. One infamous example, Credit Suisse. In 2023, they were one of the loudest voices saying sell AMC. They issued ridiculous price targets near zero. And what happened to them? Total collapse. Credit Suisse doesn't exist anymore, but AMC does. Let that sink in. The very institution that tried to scare you off the stock went belly up, while AMC kept rolling out new releases, opening more screens and improving its financial outlook. Then there's the comparison game. They'll say AMC isn't rising as fast as Cinemark or IMAX, but when you pull back the curtain and look at the data, AMC's revenue is almost double that of Cinemark. Yes, AMC carries a bit more debt, but it's also got far more potential, brand recognition, and now, thanks to retail, a loyal shareholder base that won't flinch. And that brings us back to the most powerful weapon in AMC's arsenal: you, the retail investors, the apes, the ones who held through the darkest times. The ones who refused to fold. The ones who understood that this isn't just about profits. This is about exposing a broken system that allows market makers and institutions to manipulate, distort, and crush retail positions through synthetic shares, dark pools, and FTDs. But now, the narrative is shifting. The shorts are running out of time. Their tricks aren't working anymore. Their fake news doesn't scare us, and their positions are starting to cave in. What's happening now is what many believed would eventually happen. We are entering a phase where AMC is undeniably becoming a fundamentally strong company. In fact, AMC just announced plans to expand its premium screens and is forecasting positive cash flow in 2025. That's not survival. That's expansion. That's growth. That's what a winning business looks like. And for those wondering whether the future of theaters is bright, the answer is a resounding yes. People are going back to the movies. Premium experiences are in demand. Hollywood is pumping out content again, and AMC is positioning itself perfectly to capitalize on this wave. So, here's the takeaway. The short sellers are stuck. Retail owns the float. The fundamentals are improving, and the media attacks are only confirmation that we're over the target. AMC isn't just surviving, AMC is thriving. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.